Cryptocurrency is an exciting but complex investment space that has captivated many with its promise of high returns and the potential for life-changing wealth.
Vodka with a sardine in it, please. In fact, vodka with a sardine all around.
This has created a lot of FOMO for those who aren't yet part of it. But before you dive in, there are essential financial basics you need to address to prepare you for the risks and volatility of this market. In this video, I'll walk you through 7 crucial considerations to evaluate before buying crypto. By the end, you'll be better equipped to make informed decisions that align with your financial goals and won't put your financial stability at risk. Disclaimer, I am not a financial advisor, and this video is for educational and entertainment purposes only. Always do your own research and consult with a professional before making investment decisions. Now with that out of the way, let's jump right into it. The first consideration before buying crypto is, are you struggling to pay bills? If you're living paycheck to paycheck or struggling to cover basic expenses, the last thing you should be buying is Bitcoin, or any investment for that matter. Even relatively safe investments like bonds carry some level of risk. Cryptocurrencies are considered high risk and highly volatile, even as they gain adoption by major institutions like Chase Bank and Morgan Stanley. If you're struggling financially, you can't afford that risk. Your focus should be on stabilizing your finances by saving more money and trying to earn more money. If you fall in this category, you shouldn't even be thinking about crypto.
Go on, get!
The second consideration, do you have an emergency fund? The emergency fund gives you the ability to handle unexpected expenses without financial stress. This could be your car breaking down, the hot water tank needing replacing, or needing to take a week off work because of an illness. You'll be left wondering, how are you going to handle this emergency? Line of credit, credit cards, selling assets, or robbing a convenience store?
I'll rob the Quickie Mart. All right, put your... Don't!
All of these options will cost you, and when dealing with something as volatile as crypto, selling your crypto to pay for an emergency can cost you the most. Yes, with crypto you may have high returns, but that's not without risk. The day you need to sell might be the day your portfolio is down 50%. Normally you don't sell when you're down, you just hold on and stick with your plan and strategy. But if you just lost a close family member and need to fly across the country for a funeral, if you don't have an emergency fund, you'll need to realize those losses. So before you consider buying Bitcoin or other altcoins, first save up for a $2,000 emergency fund. This will cover most emergencies, but if you lose your job for whatever reason, this won't even cover 1 month of expenses. Eventually, you want an emergency fund that can cover your bare bone expenses for 3 to 6 months. How many months you need depend on many factors such as job stability, career field and reemployment prospects, dependents, other sources of income, and economic conditions. While you're building up your 3 to 6 month emergency fund, if you still have discretionary income left over, you can start to contribute to other financial goals. Like buying Bitcoin? Well, you could, but first listen to the next consideration. Number 3, do you have high interest debt? Carrying high interest debt, like credit card balances, is like a guaranteed loss in your finances. For example, a $5,000 credit card balance at a 20% interest rate, which is average in Canada, but can be as high as 26%. This will cost you almost $2,400 in interest alone if you only make minimum payments and take you 4 years and 2 months to pay it off. Other high interest debt include a line of credit, auto loans, and personal loans. Really, anything higher than 8% is considered high interest. Paying off high interest debt is essentially a risk-free way to achieve a 20% return on your money. Crypto may offer higher returns, but those gains aren't guaranteed. If you lose money in crypto while still paying high interest debt, you've doubled your financial risk. Before buying crypto with your discretionary income, prioritize eliminating high interest debt first. If you're living comfortably, you have a fully funded emergency fund, and you have no high interest debt, you gotta be able to buy Bitcoin now.
Or should I?
Let's hear what the next consideration is. Number 4, are you contributing to your financial goals? Do you have financial goals like saving for retirement, buying a home, or even a dream vacation? These goals need consistent contributions to become achievable. For example, retirement investing benefits significantly from compound growth. The earlier you start, the more time your money has to grow. Prioritizing crypto over long-term goals like retirement could cost you tens of thousands of dollars in the long run. While crypto can yield higher returns, it's far riskier than traditional investments like index funds, real estate, or GICs. Remember, certain investment accounts like RRSPs and TFSAs offer tax advantages that make them even more attractive compared to crypto, which has no tax advantaged accounts. Crypto is taxed as either business income or capital gain income. If considered capital gain, 50% of your gains are subject to be taxed at your marginal tax rate. If you're a sole proprietor and taxed as business income, 100% of your gains are subject to be taxed at your marginal tax rate. So if you made $10,000 actively trading crypto in a short time frame, that may be considered business income. And if you made $110,000 last year in Ontario, your marginal tax rate is 43%. You'll owe almost $4,500 from that $10,000 gain. However, any capital gains in a TFSA is tax-free as long as you stay within your contribution limit. Now, the fifth consideration before buying crypto.
Okay, you know what? I don't even want it anymore.
Do you understand what you're buying? AKA doing your homework and research. This just isn't a consideration before buying crypto. This is something you should do before buying any asset or anything at all. Like you wouldn't buy a stock just because someone recommends it. You need to evaluate it, understand the company and business model, analyze income statements, balance sheets, and cash flow statements, figure out price to earning ratio, market cap, dividend yield, 52-week high and low, etc. You also wouldn't buy a new car without doing your research. You'll want to know the reputation of the model. Is it reliable? Is the engine and transmission reliable? How's the reputation of the dealership? And if you need to get it serviced. The more research you do, the more you know if you made a good decision or not. So before buying crypto, you need to understand the coin's purpose, consensus mechanism, the creators, the tokenomics like market cap, max supply, circulating supply, and burn rate. You need to know its use case and utility, stability, scalability, security, interoperability, price history, volume, the community, which exchange is it listed on, regulatory status, fees, competitors, and more. The more you know, the more confident you'll feel in your investment. Lack of understanding can lead to poor decisions like buying during hype or selling during panic. But if you've done your research, you'll know when to buy, how much to buy, when to sell, and what coins to avoid. Next, number 6. Do you have a plan? There's many different strategies for buying crypto. Are you in it for the long run? If so, do you have a diversified portfolio or are you just holding Bitcoin? Or are you looking for the big returns with a high risk, high reward strategy? If so, do you have a plan for trading coins and a clear exit plan? Or maybe you just want to make small daily profits by day trading or swing trading. If so, do you know how to do technical analysis? Or you can earn income staking crypto. This passive income source allows you to earn and hold to achieve capital gain as well. The strategy you need will depend on your financial situation and goals. My strategy that aligns with my personal situation is a mixture of everything. I plan to hold Bitcoin and other crypto coins for the long term. I keep my portfolio balanced and diversified with large caps, mid cap, and small cap coins so I can try to get a higher return while reducing risk. I may also try to do some swing trading, but it never goes well. And when the market cools down, I like to stake my coins to earn additional income. However, maybe you don't have a plan. Maybe you don't need a plan. Maybe you don't care about the considerations and you just want to throw a small amount in crypto so you don't have FOMO. This is actually a better strategy than buying lottery and scratch tickets. With Lotto, you either win something or lose all the money, and the chances are heavily favored to you losing your money. And if you do win something, it's likely to only cover the costs of the ticket. So that leaves us with one more consideration.
Are you sure about that?
Have you researched platforms and self-custody? If you're ready to buy crypto, the first step will be choosing a platform to purchase Bitcoin or other coins. The problem here is that there are so many to choose from and each one does it a bit differently. One will have the lowest fees, one will offer the most coins, one will be the most beginner friendly, one will have the easiest sign up, deposit, and withdrawal options, one will be the most secure and have the best insurance coverage. And one will have many of these benefits but will be a bit more complicated to use, involving multiple platforms, VPNs, and self-custody. If you're from Canada, check out the video up here for the best platforms in Canada, or look for the link in the video description below. However, if you're a beginner, which if you're watching this video, you should be, and want a platform that's beginner friendly, low fee, easy to deposit and withdraw, and a decent coin offering, check out Newton. If you're interested in signing up, use my link found in the video description below and you can earn yourself a $25 sign up bonus. As for self-custody, this will depend on the size of your portfolio, your intentions, and how long you plan to hold crypto for. If you have a small portfolio, you may be comfortable enough just leaving your coins on the platform, where the platform manages your private keys and keeps them in a custody wallet. If this is you, you may want to look at more reputable platforms with high security and cold storage like Wealthsimple. But be wary, anything could happen.
You could lose everything.
Therefore, it's important to have self-custody wallets, especially if you have a decent sized portfolio. These will be your hot wallet, also known as your software wallet, and your cold wallet, also known as your hardware wallet. If you want to learn more about storing your crypto in these wallets, check out the video up here or look for the link once again in the video description below. If you want to buy Bitcoin responsibly, you need to consider everything I discussed in this video. Your financial security and future should come first. However, it's your money and you can do whatever you want with it whenever you want. All this video is trying to do is help you reduce your risk as much as possible before buying crypto so you don't jeopardize your financial stability. Now, if you're ready to buy your first crypto, watch the video on the right of the screen. See you there.